But let's start with supply chain. The supply chain has been backed up, but is it now starting to ease up a little bit? Jay, I would love you to help just jump in here real quick. Tell us what you're seeing with the dry bulk index, analyze what's going on right now, and what are we to anticipate going forward from here?
Yeah, absolutely, Daniel. Thanks for the invite here. Absolutely a pertinent topic. I do want to split these up a little bit. Dry bulk index is mostly iron, coal flows, things like that. That mainly has to do with China, whereas the supply chain crisis, as most Americans or Europeans as well tend to think about it, has to do with container ships. So real quick on each. With dry bulk, we're really getting driven down lower by poor iron ore trade levels. Coal's also a little weaker than we anticipated. China is doing a lot of things there. There's a lot of new data that came out actually just yesterday morning showing that iron ore imports are down due to lower steel production levels. Cement is also way down. That's partially related to the Evergrande issue with property developers slowing down. It's also a little bit related to China focusing on their energy crisis. They're prioritizing everything for coal imports, focusing on domestic coal production as well to make sure that the power plants have enough materials. So dry bulk's been really weak and choppy the last month, but we expect it to maintain choppy and a little bit downward. Seasonality is going to kick in. It's always weaker at this point. Pivoting to the supply chain with container ships, the popular narrative has been that the supply chain is easing and improving. But if you actually dive into the data, look at the numbers, that's not really what's happening. If you look at LA and Long Beach, for instance, and you look at the levels of congestion and the ships that are waiting at dock or at anchor, we're at all-time record highs as of earlier this week. There was a 60-minute special out just 2 days ago, which is putting this on a lot of folks' minds. But we haven't seen a movement in the stocks. In fact, the stocks have been more so sideways. So we're looking forward to the rest of the week and seeing what the market will give us.
Yeah, so you said there's more ships than ever sitting off the coast. When is this going to start to ease? Because obviously we're going into the holiday season. You're talking about the seasonality. When does this end?
So normally we see a peak of the ships off coast around mid-October to early November. That happens every single year. Of course, normally we're talking 20 ships, not 70 or 80. So that's the big difference here. For shipments leaving China now, you're already too late to make the holidays. In fact, for even some of the ships out in the water off of California, if they're shipping Midland to the Midwest from there, those products might still not make it to the shelves in time for the holiday season. So a lot of uncertainty there. We do expect that those ship queues are going to start to reduce as we get through to the normal seasonal lull, which is post-holidays. So think January, February. There's also a slowdown every year in China related to the Chinese New Year, Lunar New Year. There's also probably going to be a little bit of a slowdown in China due to the Olympics. They're trying to clean up their air. So that means they're probably going to idle a lot of their industries and factories for at least a few weeks before the Olympics. So we expect a slowdown in supply push out of China around January, February. We expect a slowdown in imports in the United States around January, February. Hopefully, that'll give the ports time to catch up. Because if they don't catch up in January and February, then we're going to be right back into it next summer.